Click the bell icon to get latest videos from Ekeeda.
Hello friends, we are required to understand now here in one question how economic order quantity policy saves the cost of business. Let us read the question. ABC company buys lot of 125 boxes, which is a 3-month supply. The cost per box is rupees 125 per unit. Ordering cost is rupees 250 per order. The inventory carrying cost is estimated at 20% of unit value per annum. You are required to find out the total annual cost of existing inventory policy and how much money would be saved by employing economic order quantity. We'll first try to find out total annual cost at present policy. They have said there is purchase of lot of 125 boxes, which is a 3-month supply. For 3 months, there is purchase of 125 boxes. Therefore, for 12 months, so we got annual demand that is 500 units. In a year, material is ordered on quarterly basis. That means first quarter, second quarter, third quarter and fourth quarter. That means it is demanded 4 times. So we can find out ordering cost. The cost per box is 125 and ordering cost is rupees 250 per order. Quarterly supply received, that means one quarter there will be one order, 4 quarters there will be 4 orders. So ordering cost we can calculate rupees 250 per order multiplied by 4, it will be rupees 1000. Total carrying cost per annum, quantity multiplied by half multiplied by carrying cost. So half multiplied by 125 multiplied by 20% of 125. So it comes to 1562.50 paise. Thus, under present policy, total cost, that is ordering cost rupees 1000 plus carrying cost 1562.50. So total it will be 2562.50 250. This is the total cost apart from actual purchase cost of the input. Under present policy, as well as if we adopt economic order quantity policy, purchase cost per unit is going to remain same. Therefore, actual purchase cost of material is ignored and we have focused on ordering cost and carrying cost. Now we'll calculate economic order quantity units. We'll require to find out annual demand. We have calculated annual demand 500 units. Ordering cost per order. Ordering cost is rupees 250 per order. Next is carrying cost per unit. It is given 20% of unit value per annum. It is 20% of 125, which comes to rupees 25 per unit. So we got value of A, value of O, as well as value of C. Now we can proceed to calculate economic order quantity. Square root of 2AO divided by C, annual order 500, ordering cost 250 divided by carrying cost 25. So economic order quantity we got 100 units. We can directly calculate total annual cost if economic order quantity is employed, that is square root of 2AOC. So 2 multiplied by annual demand 500 units, O multiplied by 250, C multiplied by 25, it comes to 2500 rupees. Now if we employ economic order quantity policy, cost will be 2500. Under present policy, cost is 2562.50. Under present policy, cost is 2562.50. If economic order quantity concept is employed, total cost will be 2,500. Thus there will be saving of 62 rupees 50 paise. This is the benefit of knowing economic order quantity. We can reduce our present cost by tactfully using economic order quantity. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.